What's up guys, it's Daniel here. Welcome back to the channel. So today I'm going to talk to you both about the bullish and bearish engulfing pattern. Both of these patterns are worth learning about, especially if you're new to day trading, as they can help you identify potential price reversals on the stock you are trading. So if you're new to my channel, please consider subscribing for new weekly videos. And also, please hit the like button as it really helps with the YouTube algorithm. Okay, so let's head over to the computer now and start with the bullish engulfing pattern.
Okay, so basically a bullish engulfing pattern looks like this, and it is comprised by two candles on a price chart. A red candle here that is engulfed by a green candle here. Now generally, you'll look for the body of the green candle, which is here, to be larger than the previous candle, this red candle here. Now in this example, there are no wicks on this red candle. But if there are wicks, they don't necessarily have to be engulfed by this green candle here. But for a more reliable setup, if the second candle completely engulfs the first candle, there is more chance the setup will follow through. Also, the bullish engulfing pattern will become present when there is a downtrend in the stock, which has happened here. So as you can see in this example here, there was a downtrend in the stock with 5 red candles in a row. 1, 2, 3, 4, 5. And then this green candle here totally overshadowed or engulfed the previous red candle, which is here. And this is a good example of a bullish engulfing pattern. And this setup worked really well with the stock price heading back up. So what exactly happened in this example? This green candle here opened lower than the previous candle, and then eventually buyers pushed the price back up, and the candle closed up here, which was higher than the previous candle. And this basically shows us a pretty good example of what to look for when trading this setup. And you can see the body of this green candle here is larger than the entire red candle here. So with the bullish engulfing pattern, it can signal the potential for a reversal. But it is important to look for the previous few candles to make sure there has been a downtrend with at least 3 or 4 red candles, as this will usually result in a better chance of a price reversal. So these patterns do actually show up even when there's not really a strong direction in the stock. And in that instance, there might not be much of a change in the stock direction. So remember to look for a clear downtrend first with at least 3 or 4 red candles before taking a bullish engulfing pattern seriously. To enter into a bullish engulfing pattern, I would recommend waiting to see an increase in stock price, which happened here, and a close of the bullish engulfing candle, which was here, and then entering the trade on the next candle, which is here. And a point to place your stop would be at the bottom of the bullish engulfing candle, which is down here. So if this candle comes down to here and gets lower than this point, you'll want to close your position. So next up is the bearish engulfing pattern, which looks like this. And this is pretty much the exact opposite of the previous pattern. There should be an uptrend in the stock, as you can see here, with at least 3 to 4 candles in a row. And in this example, you can see there's actually 6 green candles in a row, all going up. There was then a formation of a bearish engulfing pattern, where this red candle opened slightly higher than the previous green candle, and then sellers pushed the price back down, and the candle closed below the previous green candle here. And as you can see, this red candle here totally engulfs this green candle here. And this setup worked out quite well with the price reversing and heading back down. So an entry to go short in this example would be here on this next candle, which opened after this bearish engulfing pattern had closed and the price had continued to go down. And the stop for this setup would be the top of the red candle here.
Now, like most chart patterns, the bullish and bearish engulfing pattern is not a perfect setup, which means it will not always work. So it is important to use other technical indicators along with this one to help you make the best decision when placing a trade. I also recommend using a trading simulator first to test out these patterns so you can be comfortable when you do eventually use real money. If you would like to learn more about day trading, please check out my channel, as there are more tutorials that can help improve your trading. I hope you have found this video helpful, and if you have any questions at all, please leave a comment down below and I'll get back to you as soon as possible. And as always, please like and subscribe.